Alright, you're welcome to Mega Profit. Let's continue from where we stopped. Now, let's look at, we talked about Morobozu. We stopped at Morobozu. Okay, we try to explain the candle and its properties. Now, let's look at the guideline for a Morobozu. Now, if a white Morobozu forms at the end of an uptrend, a continuation is likely. Okay, if a white Morobozu forms at the end of a downtrend, a reversal is likely. For a black Morobozu, this is for white Morobozu. For a black Morobozu, if a black Morobozu forms at the end of a downtrend, a continuation is likely. And a black Morobozu forms at the end of an uptrend, a reversal is also likely. A reversal is also likely. Okay, so after that, now let's look at the doji candle. What is a doji candle? A doji candle sticks have the same open and a close price, or at least their bodies are extremely short. A doji candlestick should have a very small body that appears as a thin line, and a doji candle suggests indecision or a struggle for tough positioning between the buyer and the sellers. Price moves above and below the open of price during the section, but closes at or very near to the open of price. Neither buyers or sellers were able to gain control of the result. Okay, now let's see. This is a drawing. Okay, this is called a doji. A doji. This is called a doji. Okay, a doji. Now let's go to the chart and identify a doji. Alright, we're here in the chart now. Let's identify the doji. First of all, you can see the doji here. This is a doji. This is a red doji. Okay, now let's look out for a bull doji. This is a bull doji. Okay, indecision. Okay, look at this. It happens during the what? The trend range. Indecision. Okay, let's look at for another one here. It also happens here. Look at it. During what? A trend range. Okay, look at this. Look at this. Indecision. Doji. This is also another doji here. Another doji here. Okay, now let's look out for another one here. This is another doji. Indecision at this point. Look at another doji. Indecision at this point. Okay, so you can identify doji. A doji. Okay, this is a doji. So let's look out for another candle. Okay, let's look out for another candle. Okay, a doji, let's go further. There are 4 special types of doji candlestick. When a doji forms on your chart, pay special attention to the preceding candlesticks. Okay, the ones that are coming up. So when it forms, it gives you an indecision. This is the types. Identify those types when I went to the real chart. So this is one of them. Okay, this is also one of them. This is called long leg doji. This is called dragonfly doji. This is called a gravestone doji. This is also called the 4 price doji. Okay, you can see their color here. This one is giving us no wicks at all, just indecision. You can also identify that here. Look at it. You can see it here. Let me look at it here. Let's see. Indecision is always identified during the close of a market. For those markets like Forex, where they really have the time for closure, you always see it before, meaning there is no money. Shows indecision, no money, no in and out of flow. Okay, no in and out of flow of money. So let me identify it here. I'm trying to search for it. Okay, I'm trying to search for it here. Okay, Can't find anyone yet. Can't find anyone here. Okay. Oh, this is looking like one. Okay, this is looking like one here. So this is another type of doji when we are looking at types of doji candlestick. So let's go further. Okay, now guideline. The principle for trading a doji candle. Okay, now see, if you see a doji at this point, what do you do? Now, if a doji forms after a series of candlesticks with long filled bodies, okay, like black morobozu, the doji signals that sellers are becoming exhausted and weakening. So, in order for price to continue falling, more sellers are needed, but sellers are all tapped out. Buyers are foaming up in their mouth for a chance to get in cheap. Okay, so that gives us, an idea of how to use a doji in trading. Okay, for long black candle doji, what happens? You can see it. In order for price to continue falling, more sellers are needed, but sellers are all tapped out. Buyers are now foaming in the mouth for a chance to get in cheap. Okay, now there is dominance. Why the decline in sputtering due to a lack of new sellers? Further buying strength is required to confirm any reversal. Okay, for a white candlestick to close above the long black candlesticks open. Okay, now in the next following lesson, we will now take a look at a specific Japanese candlestick pattern. Okay, so all he's talking about is, trying to tell you, now this is a bearish morobozu. Okay, now after the morobozu, what happens? There is what? Indecision. So here, giving you an indecision, what means is you need to look out for the bears are really having issues here. So there could be a reversal at this point. That's what he's trying to tell you. There could be a reversal at this point. So price may also reverse at this point, or you wait. So it tells you, don't trade. Hey, be careful, don't trade. Hey, be careful, don't trade. That's what he's trying to tell you. Be careful, don't trade. So it's always identified during a trading range or a pullback. Okay, that's where you will always see a doji. So let's go to the real chart now so that you see it. Okay, look at this. Remember, the bulls are taking it. They took it up, 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 up. What happened? Look at a doji here. So they use the doji here to reverse. Have you seen it? Look at the doji here. Reversal is taking place. Now look at another doji here. So consecutive doji bars. Look at another one here. This is a doji. So what happened? The bears now took it from the bulls, and price is now what? Coming down. Coming down. When price was also going up here, then a doji formed here. What happened? Price came down, came up. Doji formed here. Price came down. At this point, then doji also formed here. This can be called a hammer. I will come to that. Types of candlesticks. Okay, this can be called a hammer, and this is another doji. Okay, meaning that the bulls are also getting ready to take it. So what happened here? They are taking it. They are taking it. They are taking it. Here there was a trading range. Okay, then they took it. Hammer, bullish continuation, bullish reversal. Then morobozu, bullish continuation. Then a hammer, bullish reversal, morobozu, bullish continuation. Then it continues, bullish continuation. You can see this particular candle. then it keeps moving, then we'll see a doji here telling us that there is a trading range here. Then bullish continuation, it keeps moving, look at it. Then we'll have bullish continuation, then bearish, then it dropped below, then we continued up again, continued bullish continuation until we now had what a doji here telling us that, hey, something is about to happen. There is a trading range. Now it traded for a while. It gives you a sign that it is possible that the bears could also take this market from here. And what happened? The bears took it. So at this point, what do? I draw my what? I put up my what? I put up my horizontal lines. Okay? I put up my horizontal lines. So then I watch out for the break of this. Okay? I watch out for the break of this. As soon as there is break, then I know that these guys have taken up the market. Look at it. So after this trading range, there is a breakout here. Then price began to what? Come down. So there is also a reaction here because of what we call the support and what? Our resistance, the key level of support and resistance. So price may likely come down up to this level, and before we'll see a reaction. Okay, it could also drop up to this level too. Okay, but there must be a reaction here. So you can see it's currently reacting. They can't just sell directly like that. No, they must have a reaction here. The bulls must exercise their strength. Why? Because this is an area where price tested and tested over time. You can see it. Okay, and that's why we call it a key support and resistance. This is a key resistance area. So the bulls will resist it at this area. So you can see price have gotten out of this place, and after the breakout, what do you expect? Price will begin to push more lower. Begin to push more lower. So I can also draw my trend line here. I have through my horizontal line. I can draw my trend line here. You can see my trend line is touching how many? It's touching almost all of them. It's touching almost all the edges. Okay, this is how to draw a trend line. So you can see now, good. The wicks are not important to me because these are rejection. So what is important to me is the edges of what? The body. Okay, you can see. This is a perfect candle. This is a perfect chart. You can see. So each time price goes up, it drops, gets up, goes lower, it goes up again, goes until there was a break. So now when I see this this candle, it gives me a sign. This particular candle, okay, this doji, gives me a sign that these people they want to do one magical. All right, then price began to form trading range. So the market has changed its face from a bull market to what? A trading range pattern. Then it comes down here, came up here again, then until it forms this big bar, this big Morobozu bar. That gives me a very strong sign. And after a breakout of this point, what do? You move out. Just see a bang of what? You look out, go out from there, then price begin to what? Come down. Okay? Then you celebrate what you have. Then you begin to look out for where to buy again. Okay? So that is how to use your words, your candlesticks for classification of what? Candlesticks. So in candlesticks, we have our spinning top. Okay, we have our spinning top. We have our Morobozu. Okay, candlestick. We also have our doji, and there are 4 types here. Okay, thank you.